In September 2008, a Tuesday morning, the United States came within about 3 hours of a complete economic collapse. Not a recession, not a crash, a collapse. ATMs going dark, businesses unable to make payroll, grocery store shelves emptying within days. That is not hyperbole. That is what the U.S. Treasury Secretary told a room of stunned congressional leaders, and most of them had no idea it was even possible. So how does the entire global financial system nearly evaporate in a single morning? And why does almost nobody actually understand what happened? Let's go back. For most of human history, if you wanted to buy something, you needed money you actually had. Simple. But somewhere along the way, banks figured out a trick. If someone deposits $100, the bank only needs to keep about 10 of those dollars on hand. The other 90, they can lend it out, and whoever borrows that 90 deposits it somewhere else, and that bank lends out $81 of it, and so on, forever. This is called fractional reserve banking, and it is how $1 becomes $7 in the real economy. It is also, by design, a system that only works if everyone agrees not to panic at the same time. Now take that system and add Wall Street. By the mid-2000s, banks had invented something extraordinary. They were bundling thousands of mortgages together, slicing them up and selling them as investment products called mortgage-backed securities. Pension funds bought them, foreign governments bought them, your retirement account probably held some of them. They were rated AAA, safe as houses, literally. Except the houses were not safe. Lenders had been handing out mortgages to people who could not afford them because they were not planning to hold those mortgages. They were going to sell them, bundle them, let them become someone else's problem. The incentive to care about risk had been completely severed from the people actually creating it. When housing prices started dropping in 2007, the cracks appeared. When they kept dropping in 2008, the whole thing became a question no one could answer. What are these mortgage bundles actually worth? Nobody knew. And when nobody knows what your assets are worth, nobody wants to lend you money. And banks run on lending. Banks lend to each other every single night just to stay liquid. When that lending froze, suddenly Lehman Brothers, one of the largest investment banks on earth, could not borrow enough money to open for business on Monday morning. It filed for bankruptcy on September 15, 2008. At the time, it was the largest bankruptcy in American history. The market did not gradually process this. It panicked instantly. Money market funds, the boring, safe accounts where companies park cash for payroll, started collapsing. Overnight lending between banks effectively stopped. The commercial paper market, where corporations borrow money for day-to-day operations, froze. Treasury Secretary Hank Paulson and Fed Chair Ben Bernanke went to Congress and said, essentially, give us $700 billion by the end of the week or we do not know what Monday looks like. The bailout was controversial, deeply. Ordinary people lost homes and jobs, while the banks that caused the problem got rescued with public money. The anger was real and it was legitimate. But the counter-argument, made by people who understood the plumbing of the system, was grimmer. Let the banks fail completely, and the money in your checking account might simply stop being accessible. Not because you spent it, because the system it lived inside had ceased to function. The bailout passed. The Fed flooded the world with liquidity, and slowly, painfully, the bleeding stopped. But here's the part that nobody really reckons with. The system was fixed by making it bigger. Banks got larger, complexity increased. The tools used to stabilize the crisis, cheap money, government backstops, quantitative easing, became the new normal. and the fundamental incentive problem that profit is privatized while catastrophic risk eventually gets socialized was never structurally solved. So when people say the 2008 crisis was a once-in-a-generation event, they might be right, but a once-in-a-generation event is still something that happens again. The only question is which Tuesday morning it lands on.